JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 21st of September 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, guys, the first one I'm going to pick up here is Nikkei 225, and yesterday we saw the market selling off heavily, and well, I mean, it wasn't a very good day for the bulls yesterday, and we saw Nikkei, yesterday Nikkei was closed, but it opened up today, and of course it followed suit and drifted heavily to the downside, dropping below this hurdle here. And if you remember last week, I talked about this idea where I said that if we see a drop below the 30,202 territory, somewhere around here, then yes, my next target will be somewhere initially towards around here near this 29,480. Or we could go all the way towards this upside support line taken from the low of the 20th of August. And as you can see, so far so good, I would say, is we are moving in that direction. The index is already closed, but yeah, it did lose around 2.16%. So again, let's see how this is going to play out today, of course, but doesn't look very promising for the buyers. Now, of course, the VIX index, and this is something that I don't touch on very often, but nevertheless, I wanted to keep it show you that yesterday the so-called fear indicator, the VIX, did pop higher, heavily, I mean, strongly higher, and yep, it spiked here. I mean, again. Judging from the kind of the tendency, the trend here, or the history of its movement, then maybe the volatility could decline here. So after we get that strong spike higher, and the next day we get that drift back down, and after a few days we get another spike. So again, keep that in mind. Let's see if that's going to be the case, but for now, yeah, that could be the case, and we could see the volatility going down a little bit here today, calming down, when market participants could try to figure out what they want to do further. But again, like I said, at the moment, I mean, let's say on the indices we could drift further south, but maybe not as strongly as yesterday. Jumping into DAX, the German index, and also it broke below this upside line taken from the low of the 13th of May, and we drifted towards the lowest point of July, which we managed to reach, and we managed to overcome it. Yeah, so at the moment, I would say if this continues to drift lower, certainly we could see maybe another retest of the this lowest point of July, and if that gets broken, certainly again, then yes, the next target is the 200-day EMA, guys. So let's keep that in mind. For now, long story short, like I said, is if the price continues to trade below this upside line, then yes, we'll continue targeting the downside. If it climbs back above this upside line, then certainly there could be a possibility maybe to see a bit of a retracement back up here. Nasdaq 100, so also declined heavily. Look at this, I mean, drifted lower, but found very nice support near this upside support, upside line taken from the low of the 23rd of March, and this was a tentative upside line. Previously I talked about it, and yeah, it found a good hold up here. It didn't really reach to the lowest point of August near the 14,773, but again, if by any chance the index continues to drift lower and falls below that upside line and breaks below that 14,773 territory, then yes, we could aim for some lower levels. At the moment, the cash index sits around 15,068 territory, so slightly above yesterday's close, but and still above this upside line. So like I said, let's see how this is going to play out. For now, I am very careful here, and like I said, let's see how today's day is going to go. But I'm watching these levels carefully. For the upside, what you can do here is maybe wait for at least a push above the 15,157 territory, and then yes, we could go for the upside. The dollar index did initially drift higher yesterday, but it kind of formed a nice little shooting star here. So, which means that according to all the TA rules, this kind of candle tends to be a reversal signal. However, I would say that has been acting differently in the past, so that's why, guys, I mean, I would say rather go with the flow here. Just don't really focus on this as being a reversal. Yes, it could be, but again, let's be a little bit on the safe side. So what I would like to see here, and as you can see, this 93.18 level is somehow acting as a good area of support, but if once again we see a drop below it, then maybe we could go for that larger correction to the downside. Because again, the reason why I'm saying correction, because we're trading above this upside support line taken from the low the 3rd of September. So in a way, any kind of throwback here could be classed as a temporary correction before another possible leg of buying. If you're a little bit on the cautious side, what you can do here is wait for a push above yesterday's high and above the 93.45 level, and then go for some higher levels. Yep, so that's again guys, I mean, with the DXY, I mean, if by any chance, for example, equities, the indices start recovering and go for a larger correction, then yes, we could see dollar drifting maybe back down a little bit, because again, we've noticed, I mean, we understand that the US dollar sometimes acts as a nice little safe haven, and for investors, kind of where to jump into when the times get a little bit edgy. So yeah, for now, long story short, guys, these are the two levels that I'm keeping an eye on. I can see in chat room here, good morning to you too, Evu. I hope you're having a wonderful start on this morning. I mean, and for the rest of the viewers as well, guys, I hope you're all having a fantastic start of Tuesday. I hope you didn't, you were on the correct side yesterday, I hope, of the indices. If not, then well, let's brush it off and start fresh again. So, gold did pop higher, certainly. Did kind of put its safe haven suit on yesterday, and yep, it popped a little bit north here. And now let's see how this is going to play out. For now, looking at this picture, we're trading still below this downside line taken from the high of the 3rd of September. Even if we drift a little bit higher here, still, don't get me wrong, I mean, we could class this as a temporary correction before another leg of selling. In order to consider the upside, well, a break of this downside line would be needed. So yeah, keep that in mind, guys. But if you're not really comfortable with this scenario here, maybe it might not even go there. It might even find resistance somewhere near one of these previously looked at support levels. So in that case, I would say if you want to be a little bit more on the safe side, then probably just wait for a drop below the 1742 territory right here, marked by the yesterday's low, and then yes, lower levels could be met. Now jumping into WTI Oil, and here you can see that the commodity managed to find support near this upside line. It managed to kind of, let's say, I wouldn't say really rebound, but it managed to hang near this upside line. It managed to climb back above the 70.59 territory. Yesterday it did close below it, and today we're seeing a bit of a push back above it. I would say this way, that if we see another drop below this hurdle, yes, we could start looking at some lower levels. However, at this point in time, given the situation here, I would probably stick to yesterday's low, which is roughly around the 69.88 level, which also coincides with the 21-day EMA, and a nice good drop below it may open the door towards lower levels, guys. So again, I'm not really gonna focus much on this upside line anymore. Probably I'll keep it for now just to see how everything's gonna shape up. But even for the upside, for example, I would like to see a push above this barrier, the current highest point of September, near the 73.11 zone. Now jumping into Ripple, and yeah, Ripple yesterday drifted lower, and if you remember last week I talked about this hurdle here, the 1.0520, which we managed to break nicely and drifted lower. When I said then that my next target is going to be this 100-day EMA or this 200-day EMA, where you can see that the crypto managed to find very good support. So what we're going to do now is, well, we're going to go slowly to the downside. So for now, I would say I would like to see a drop below the current low of today, near the 0.8658. Such a move here would confirm a forthcoming lower low, and yep, our next target could be around the 0.6953 territory right here, marked by the low of the 4th of August. So long story short, another thing to keep in mind here, of course, is this downside line taken from the high of the 6th of September. So if you were looking for some upside, then, well, wait for a break of this downside line, and then yes, we could go for some higher levels. Now AUDNZD, so finally seeing a bit of a push higher, and we're coming closer to this downside line taken from the high of the 13th of July. So I talked about this one recently, and as you can see, we're coming close to it. So let's see if we can break it eventually. I mean, if we can, then that's great news for the buyers, because at the same time we might also maybe jump above the 21-day EMA, and well, then we could start aiming for that lowest point of December of 2020, and which is around the 1.0418, and then, well, slowly we could start climbing higher. But at the moment, all eyes are going to be on this downside line. If it holds, another slide could be possible, but if it breaks, then yep, this is where more buyers could join in. So, but if you're a little bit on the careful side here, what I can suggest here is to maybe wait for a drop below the 1.0280 territory, and then consider maybe some lower levels. Okay, so now then, jumping into another pair, which is quite interesting, and I do sometimes look at it, and that's US dollar against the Turkish lira, guys. And look at this. I mean, of course, the all-time high for this pair is somewhere roughly around that 8.70, well, let's round it up to 8.8 level. Yesterday and actually from the end of last week, we started pushing higher. Yesterday we formed a bit of a shooting star here, and again, this could be seen as a potential maybe reversal signal. However, I wouldn't rush into anything yet, because if it somehow pops above the 8.68 territory right here, that's where, yes, we could start aiming for that all-time high again. For the downside, what I need here is, let me just draw this one very quickly. For the downside, I need to see a push, a break of this upside line, and then yes, we could aim for some lower levels, guys. But for the moment, I would say let's be very careful, let's be very cautious, and yep, if we break this upside line, then yes, we could start aiming for the downside again. US dollar against Japanese yen. So yesterday it drifted lower, the pair, for obvious reasons, of course, because due to some yen buying. And yep, weakening, or actually I wouldn't say weakening, but the dollar was not on the strongest. I mean, it was on the stronger side, but not as strong as the Japanese yen. So the yen and the Swiss franc were among the gainers yesterday in the currency world. And yep, here we can see exactly that. So. But either way, for me, the technical picture here on this pair still is neutral, because I'm watching this one and I'm watching this squeeze, and I'm waiting for a clear break through one of these lines here, either the downside one or the upside one, in order to consider the next short-term directional move. US dollar against the Canadian dollar, oil yesterday, as we saw, drifted lower. However, USDCAD yesterday, although yes, it pushed higher, it made its way north. Certainly weaker oil also kind of helped that issue, and then we today we're seeing a bit of a retracement back down here. So what I said to you previously when I was covering USD-CAD, that if this area somehow provides resistance, this 1.2840, then we could maybe see a bit of a retracement back down. Now what we got here yesterday is a breakout, and we saw this false breakout here happening because the body of the daily candle still remained below this hurdle, and today we're seeing that effect, and we're seeing the pair drifting a little bit more towards the downside. So let's see if we can get another a bit of a larger correction lower. If we don't, and we stall somewhere near this 1.2762 territory, then yes, a nice little rebound back up could be possible. Now, jumping into GBPCHF. So, of course, Swiss franc was bought yesterday. GBP was on the weaker side, and yep, that's the effect we got here. And let me just get rid of some of these lines, no longer needed. This one we can get rid of, and yep, we can see that we managed to break this upside line taken from the low of the 23rd of August, and then now basically what's going to happen here, or what could happen here, is a further decline could be possible, especially if we fall below yesterday's low near the 1.2656 level. If we clear that level, this will confirm a forthcoming lower low, and my next target will be this 200-day EMA. That's what I'm going to aim for, and then I'll take it from there. For the upside, I would rather take a very conservative approach here and wait for a push above the 1.2819 level here in order to go for some higher levels. EURGBP. So yep, you can see the euro was a little bit on the stronger side yesterday, if I can say the word a little bit, but yep, we had a nice push higher. This idea kind of is so far working out. The idea that I talked about here was previously that we might see a drift lower, but if the pair finds support somewhere near that 0.85 territory, a nice good reversal here could be possible. However, now looking at this picture, I mean, to be a little bit more on the safe side, I would rather wait for a push somewhere above this barrier right here, this 0.8618 level. This will confirm this would confirm a forthcoming higher high, and we potentially could lead to a test of the 0.8672 territory. As you can see, acting perfectly as a nice area of resistance. So that's why I'm not dragging this one way too much higher. Initially, I'm just gonna stick to these levels here. So if we pop above yesterday's high near the 0.8595 level, then yes, I'll go for the upside. And finally, EURUSD, guys. So EURUSD drifted lower yesterday, but found support near this 1.1735 level. And look at this, 1.1704 level. And look at this beautiful kind of target being met. So what I said to you previously, if you remember on EURUSD, and last week I talked about it, and I said that if we drop below the 1.1770 territory, my next target is the 1.1735 level, and then 1.1704, which is the lowest point of March of this year. And you can see that this is exactly where it went. What I said then, if we clear that, then this is where we'll start looking at some lower levels. But we got to hold up here. We had a nice little retracement. What I'm going to consider now is maybe something like this happening. So let's see if we can get a nice decent retracement back up, and then let's see if this downside line provides resistance. If it does, another slide could be possible. If it does not, then well, you know the drill. We could potentially go for some higher levels, but I'm not going to really drag this one way too much to the upside. I'm just going to aim for that 1.1851 level. And then I'm going to aim for the 100-day EMA or the 200-day EMA as well. So that's kind of the game plan here. Let's see how this is going to play out, guys. But for now, again, I'm looking at the EURUSD this way. If we pop above this 1.1735 level, if we climb again above it, then yes, I'll go for that larger correction. If we stay below it, then I'll take a bit of a neutral stance, to be honest, because in order to consider the downside, I would rather wait for a drop below the 1.1704 level again. So that's it for this session, guys. I really hope you found it useful, and thank you very much for watching and listening. I really appreciate your time, guys. I really do. So thank you very much for your views, your likes, your comments. That really helps. Yeah, I hope you have a nice trading day today. Stay safe, have your stop losses in place, and everything will be fine. Join me tomorrow morning, as always, at 6 o'clock GMT time, and yeah, we'll take it from there. Thank you very much, and bye-bye.